FSB. FSB.
Good morning, everybody, and a very warm welcome to this FSB webinar, Budget Insights for Small Businesses. My name is Emma Smales, and I will be your host for this session. Today, I am joined by FSB Policy Director, Paul Wilson, FSB Head of Public Affairs, David Hale, and Andrew Marsden, who is the Tax Advisory Manager for our FSB Tax Advice Line delivered by Markel. Last Wednesday saw an historic budget on many fronts, but with so many measures announced, it can be hard to work out what are the implications for you and your business. Small firms, you provide jobs for more than 16 million people in communities in every part of the UK. You are also the most likely to give opportunities to the hardest to reach parts of the workforce, such as those who have been out of work for caring responsibilities or long-term health conditions. So what does this new tax and business landscape mean for you? With our expert panel, I will try to break down the major announcements and specific changes to give you the insight and information you need to start planning for how you and your business can best adapt and respond to Wednesday's announcements, helping you to navigate the next year immediately whilst preparing for the next 5 years and beyond. At the end, we will be taking questions, and we have actually already had some sent in. Please do put questions in the question and answer box, and we will try to cover as many as possible. Just to note, we can't give individual advice on this webinar, but we will aim to give you as many answers as we can. So, Paul and David, as a team across our regions and nations, our local members and staff to our National Policy Chair, Tina, and our national policy teams like you, we strive to provide a voice to the UK's 5.5 million small businesses and self-employed. Fiscal events such as last week's budget are such a key focus of all our work. Paul, can you give us your initial thoughts on last Wednesday?
Sure. Good morning, Emma. So the first budget of a new parliament is always really tough when it comes to tax. With 5 years until another general election, there's plenty of scope for a new government to raise taxes and hope the public have forgotten about it by the next time they go to the ballot box. And if you look back in history, this predictably happens at the start of a new government. And more practically speaking, and I think this context is important, the new Labour government were using this budget to look to fund the commitments that they've made in the manifesto and the public sector pay rises that they've already committed to. And that's why we saw up to 40 billion of tax rises in this budget. It was clear from the run up to the budget that Labour weren't going to be prepared to raise income tax, VAT, or national insurance contributions for individual workers. So that leaves businesses taking on a really high burden. And that's why this budget has a lot of tough challenges in it for small businesses, which will vary depending on your business sector, your size, etc. It also, however, FSB have been working on it unbelievably hard over the previous few months, right across the organisation, from volunteers to staff. And that does mean that we've managed to achieve some nuggets of really good news, some really important news that can protect some small businesses from some of the more difficult aspects of the budget. So that's what we're going to talk about today. We're going to talk about a range of different things. So we're going to talk about national insurance. We're going to talk about the employment allowance, national living wage, business rates, corporation tax, capital gains tax. There's a lot of really important ground to cover here. But I just wanted to say that by way of context, because you do always see this at the first budget of a new government.
No, that's really helpful. Thank you, Paul. David, what's your initial thoughts? Oh, David, you're just on mute. Sorry.
There's always one. Not too much to add to Paul, really. This budget has been the priority of what we've been working to, both in the background work during the general election and then since the government has formed. This budget, we've tried to meet it head on as much as possible and to protect as many small businesses as much as we can. And that, I would say, probably sits alongside the work we've done on the Employment Rights Bill, just to try and get that into a more long-term process where proper decisions can be taken that are mindful of small firms and what we've done on the growth agenda. But yeah, we've tried to do as much as we can and look forward to going through the individual measures today.
Thank you. So yeah, moving to that detail, as you've both said, there was a lot announced. Can we start with those national insurance contributions and the employment allowance? Last Wednesday, I have to say I have a lot of contact from members who were confused about these concurrent changes. David, perhaps you could explain them a little bit more.
Yeah, sure. So I think it's just best to go through the numbers, and I will go through them as carefully as I can. I think how much extra or not national insurance you're paying really depends on three things. It depends on how many staff you have, how many hours, how much you pay them, and how many weeks a year that they work. And those are the kind of three primary things. So I will just go through it step by step, and it might take a minute. The actual policy changes are bringing the secondary threshold by where you start paying national insurance down from 9,100 for each worker to 5,000 annually. It's actually weekly, so around £96.15. And then also putting the rate up from 13.8 to 15%. So I think best to start with a salaried worker that works the same hours throughout the year. It makes it a bit simpler, and then I will go through how much extra a weekly earner you would be paying, and then we can talk about the employment allowance after that. So I think firstly, if a worker is earning more than 9,100, for each worker you have earning more than 9,100, you will see a £615 increase in your national insurance bill. And then for every £1,000 above that, you will see a £12 increase. And then if you add that 615 and then the £12 per 1,000 worker up, that's how much you would be paying for that worker. And then if you add your whole workforce together across the year, that is how much extra you would be paying from the rises.
Mm-hmm.
And then if you currently get the employment allowance, I would take £5,500 off that.
Mm-hmm.
And that is the net for you as a business with people on annualized hours. If you don't currently get the employment allowance, or you don't claim it, I would take 10,500 off it. And that then is the net in that case. The change on the employment allowance is from 5,000 to 10,500. And also there used to be a cap for somebody with 100,000. And that cap has been removed, so more people can now claim it. If you have workers on a weekly basis, the sums are similar, but a few things change. So now, previously, if they earn less than £175 a week, you wouldn't pay national insurance on that part of their salary. That has now gone down to about £96.15. The difference there is about £11.21, 22. So you would be paying that extra a week, and then you would be paying, the £1.20 per £100 extra that they earned on top of that. And the national insurance, the employment allowance, importantly, is annual. So if they only work for, say, 6 weeks a year, so say you're a very, very seasonal business,
yeah,
or say you work from Easter through to October, the employment allowance is annual. So take that 5,500 extra or 10,500 total off the annual bill. So it squeezes that down. And then finally, in terms of your own salary that you might take as a company director,
mm-hmm.
employer national insurance will apply to that in the same way. So if it's 9,100 and it's a PAYE salary, it would be that same calculation, £615 extra, and then £12 per 1,000 above that you take as PAYE salary.
Mm-hmm. Brilliant. Thank you, David. I will just note at this point that this webinar is recorded. So if anybody didn't get a chance to make a note of those, it will be going on our on-demand page and you can look on later and make a note of those. Andrew, we've just had a question in. and if it's all right, I'll take it now because it is relevant. How do I actually claim the employment allowance? Is it straightforward?
It's very straightforward. It's a matter of using your software that you already have where you report to HMRC. It's just a matter of ticking a box on the system that says claim the employment allowance. So once you've clicked it on, it should then continue to claim the employment allowance for the rest of the year. I think from my own side, just listening to David, I agree with him that this is going to be very difficult to give an exact answer on what each person is going to pay for national insurance and secondary, which is why, again, we'd encourage people maybe to use the phone lines to give us a ring about this. It will be difficult to give an answer here on what people will generally increase. If you have the same staff every week, every month, then it's quite easy to see. I think one of the things from David said about the employment allowance, it does come all in one go. So if you had £12,000 of employment allowance of national insurance due, the first 10,000 will be exempt, and then 2,000 will be due. So if you're planning your year, you may see that no employer's allowance will be due for the first 10 months, and then the remaining 2 months, you would have it all in one go. So people will need to budget for the fact that their employment allowance will potentially stop it being due for a while, but then they will hit later on, depending when it comes in. The only other ones I did see with this new system is people who you can't claim the employment allowance in all situations. So if your business is doing more than half of its work in the public sector, you can't claim the employment allowance. And if you're a company which has one director and that director is the only employee on the payroll, you can't claim in that situation. Now, at the moment, there's a lot of small companies who have got an individual who's below the 9,100 and they get pension credits for the fact that they don't pay national insurance. Now, that's going to be a bit of a change because now they've reduced it down to 5,000. You would have to pay, I think, £225 national insurance to get the same state benefits that people currently get. So again, in all of these things, I would suggest it is a major impact on national insurance. If people have doubts, if they have questions, then really I would encourage them to ring the phone line and hopefully we can give them more bespoke answers to their particular issues.
Yeah, we will be putting the details of that. That's the FSB tax advice line for FSB members in the chat for this webinar. We've just had one question. When does it start, the new rates?
It starts on the 5th of April 25. So it comes in the start of our next tax year. So at the moment it's staying the same, but will come in at the start of the next tax year, so 25-26.
Great, thank you. I guess, Paul, one thing to add into the mix at this point, and you mentioned it, is the national living wage. And we have had members who have contacted us saying it's probably now not possible to taking that into account, those rises and the NIC rises, to take on new staff, particularly lower level or entry level staff. Is this something that you've been hearing?
Yeah, so we're really concerned, of course, about the cumulative cost of employment. You can't look at any one of these things in isolation. All of these decisions come together for a small business owner who is employing people and looking at how the national living wage has increased if they have people on the national living wage, adding in the cost of national insurance, offsetting the cost of the employment allowance. And you've got to take all these things in the round and then think how best to adapt for your business. So in terms of the national living wage, let's just quickly start with the facts. So the national living wage for people aged 21 and over is going up to £12.21 for its next increase. For 18 to 20-year-olds, it's going up to £10 an hour. 16 to 17-year-olds and for apprentices, it's up to £7.55 an hour. So that is another sizable increase in the national living wage. And the way that the government sets these rates is that they ask for recommendations from the Independent Low Pay Commission, which the government will generally then go on and accept. And that's exactly what's happened this time. So the Low Pay Commission is asked to take into account various things. They're asked to keep the national living wage above 2/3 of the median salary. They're asked to take into account the impact on the economy, and they're asked now to take into account the cost of living as well. And what we've seen, therefore, with the headline rate is a 6.7% increase, which is big, and it's bigger than was anticipated earlier in the year, and it'll affect employers in different ways. So we know from last year's increase in the national living wage that it had an impact on around 3/4 of employers. And you'll know, based on your business, what steps are best to take. But typically we hear from our surveys that we run that the most common steps that we taken to deal with the national living wage increase are to raise prices. Around half of employers typically do that, take lower profits or try and absorb the extra cost. Around 2 in 5 do that. You might cancel or scale back investments that are planned. Around 30% do that. We might recruit fewer workers or give workers fewer hours. And so, you, as I say, it'll be up to you to decide what's best for your business. We have been warning government in the context of all of these cost increases, not just the national living wage, that, you know, these are the consequences. It does mean lower investment levels in small businesses. It does potentially mean fewer jobs and fewer hours for workers. And I think, you know, that's accepted and recognised, and the government did recognise that as a risk on budget day. It's worth just quickly also saying that for the 18 to 20-year-old group, it's an even bigger increase. So in percentage terms, it's a 16% increase. And the reason for that is that the new government has announced an intention to bring that group up to the level of the general over 21 national living wage over the coming years. So that's why that is a proportionately bigger increase for that particular group.
Thank you. Moving to business rates then, David, if I could come to you, there seem to be a few announcements here. So what is set to change? What will change?
So the main thing from business rates that people have to be careful of, I would say, is the current retail, hospitality, leisure relief that is currently 75%. That was, you know, and to be fair to the government, was scheduled to end. It will be retained, but it will only be retained at 40%. So you will see, if you are in retail, hospitality, leisure, and you have been claiming that 75% relief, you will see that reduced to 40%. That is the biggest. That is the biggest negative impact as a particular business. The other thing that you will see is the small business multiplier, which normally goes up with inflation, will be frozen, and that is just that is not a negative impact. That is a positive freezing of the multiplier. But yeah, the big one is the reduction from 75 to 40%, thankfully not to zero, of the RHL discount. That is the biggest single thing on rates. There are some future looking policy things on rates that we will be working quite hard on just to get a better permanent settlement on business rates, but that is not a change that is coming in. That is a change that we are working on.
We've just had a question from Rob who says, currently, I, amongst all the other small businesses in my town, benefit from 100% small business relief and have done since way before COVID. My question is, will we remain on this, or are we at risk of going towards the new 40% relief?
So small business rates relief will remain.
Yeah.
We will fight incredibly hard to make sure it remains. I wouldn't worry too much about small business rates relief. I think, you know, if it ever came to it, that is a fight that we could win. But yes, I think small business rates relief is fine.
Paul, you wanted to step in?
Yeah, just to illustrate the importance of small business rates relief, we did a bit of research last year looking specifically at high streets, and over half of high street businesses said they'd be able to invest more in their business if that threshold were actually increased for small business rates relief. If more small businesses benefited from that relief, it is such an important relief. And we talked to government about it, you know, endlessly, probably too much from their perspective, but we would really fight super, super hard for that one. So just to absolutely echo what David said there.
Okay, thank you. The next issue that was causing members concern when I spoke to them last Wednesday, they rightly feel that building a business involves a significant element of risk and personal as well as financial investment, and it's all on them. So they are 100% responsible, often taking their homes, family and dreams into that risky water. One member spoke to me last week and referred to it as the 3 a.m. moment. So Emma, if you haven't woken up at 3 a.m. thinking, what the bleep have I done, or where the bleep will I get that money from, then you haven't run a business. But surely that risk needs to be incentivised and rewarded. as that risk in turn creates jobs, opportunities and prosperity in all our communities. So my next question and our members' concern is, what are the changes to capital gains tax? Is that risk now worth it? Paul, would you be able to come in here?
Well, look, I really hope that risk is worth it. It's people who are brave enough to have that 3 a.m. moment, to take the risk, who drive the economy. And without them taking the risks and investing in their businesses, we simply won't see the economic growth that the government needs in order to fund public services. So this is as important as it can be. And I would also say, by way of context, that since 2020, and obviously the pandemic played a huge part in this, we've lost 500,000 small businesses. We really need to see those numbers recover, and it's about encouraging risk taking and making it worthwhile. So to the question, what's happened on capital gains tax? Well, the basic rate of capital gains tax is increasing from 10% to 18%, and the higher rate has gone from 18% to 24%. So there is an increase in CGT. Now, really importantly, from a small business owner's perspective, there is a relief called business asset disposal relief. It used to be called entrepreneurs relief, which perhaps was a simpler name to understand, that we were really worried about prior to the budget, because this relief means that as an entrepreneur, you will pay lower rates of capital gains tax on the sale of your business. And to be frank, there have been groups, I won't name them, but you can look them up if you want, who've been lobbying for this relief to be abolished for a while. And FSB have had to push really, really hard to get the Treasury to see the importance of retaining it as a relief, because we want entrepreneurs to be rewarded for investing in their business. And we know that many entrepreneurs use the sale of their business to fund their retirement. So it's not reasonable or fair for them to face high tax rates equivalent to general levels of capital gains tax. Now, the good news is that business asset disposal relief has been retained. We haven't lost it, meaning that for the first £1 million, you will pay a lower rate of CGT. The bad news is that it will go up. So from April 2025, the rate will go up from 10% to 14%. And in April 2026, it will go up to 18%. So good news, there remains a preferential rate if you're investing in your business and selling that on the capital gains tax that you'll then have to pay. But as I say, the bad news is it will ultimately go up from 10% to 18%. And just while we're on the sort of topic of risk taking, I think it's worth saying that there are other things that FSB are incredibly focused on that we think would really help encourage people to be able to take risks and invest in their business. So it's not just about tax rates, but also about things like when you take on finance for your business, the fact that so often people are asked to, provide personal guarantees, potentially putting their homes on the line for very small loan amounts. And there's things like that that we're really focused on trying to avoid, those deterrents to people taking risks and investing in their business, particularly when they're disproportionate and there should be no need to ask for that personal guarantee. And I just wanted to mention that as an aside, because that's something that we will continue to be lobbying on and talking a lot about into the future.
Absolutely. And it's something I hear on the ground all the time, is around personal guarantees. So that's really good to hear. Andrew, I know that you're really busy typing some answers in our chat, so thank you. But is there any specific advice or steps that businesses should be taking now if they are considering, or indeed in the process of selling their business?
Well, one of the changes in the budget was the change to business asset disposal relief. So the rates of business asset disposal relief are going up. Now, business asset disposal is for when you sell shares in your trading company that you've held for more than 2 years. Now, the rates were currently 10%, and meant that if you sold a company, you could get the first £1 million of your gain at 10%. Now, the rates currently stay at 10% for the remainder of this year. Next year, they increase to 14%, and the following year, 26-27, they move to 18%, which is currently the lowest rate of corporation tax for other assets. I suppose the answer is, if you want to sell your business, if you can do it this year, you're going to get the best rate of tax. Next year, it's going to be slightly more, and in 2 years' time, you're going to hit the highest rates. So there is a difference now between an 8% increase over the next 2 years. So I don't know that, we've had a lot of questions on the phone line where people suddenly panicked that things were going to happen instantly, and a lot of them have looked at selling a business. I don't know that you want to just sell your business and get the worst deal for yourself. It takes time, but if you can sell this year, then clearly there's a tax advantage in doing it. So, but you need to be aware of it, and you need to get that sale in place by the 5th of April. You need to have the contracts exchanged. Otherwise, you'll be moving into 4% next year increase and effectively 8% in 2 years.
I guess talking of succession planning, the next question here probably, David, is on inheritance tax, and there have been some changes, specifically around specific sectors, hasn't there? Could you explain a little bit more?
Yes. So I just go through what they've done really. So there are two main reliefs that have changed. So there is business property relief and there is agricultural property relief. Those two reliefs have now been capped at £1 million. So any shares that you own or any shares that anyone else owns in your business, for you as individuals, your estate, the amount that can be claimed 100% tax-free is £1 million. Above that, it is now a 50% relief on a 40% tax, so a 20% tax. So for anything, say you and your partner each own 2 million shares in £2 million worth of shares in a business. Broadly speaking, the first £1 million on either of your estates is tax-free, and then there would be 20% on the second £1 million each. So a £200,000 tax bill for the beneficiaries of your estates and a £200,000 tax bill for the beneficiaries of, in that case, your partner's estate. That is the main change. Agricultural and business property relief are now a combined relief that has a particularly negative impact, say, in terms of the combination, if you are a farm and you have a farm shop. So they're not separate reliefs. They are one relief. But I would say if you are in a position of being in a family business where you expect that business or the part of that business that you own to be worth more than £1 million, or even if you expect to be approaching, like that is the sort of time where it would be useful to seek further advice relevant to your personal circumstances. The normal 7-year gifting rule applies, but there are particular tax reliefs that are, there are the particular tax questions that you should know the answer to before. I wouldn't necessarily assume it is quite as simple as it might be on a personal estate. There's something called gift holdover relief, which basically is to do with where capital gains are charged when assets are gifted at less than their value. So things like that you would need to consider if you expect to pass on a business that is worth less than £1 million and much less than £1 million. I wouldn't worry too much. It's always useful to seek advice, but I wouldn't worry too much. But if it is something that you think will affect you, I would seek advice on planning in relation to it.
Yeah, okay. Andrew, anything specifically on inheritance tax that you would add at this point, or has David covered?
What I'd say about inheritance tax, is that the basic principle of inheritance tax is gifting things away and living for 7 years. So you need to be doing that during a period of time where you're young enough, hopefully, to survive those 7 years. There is these new rules don't come in until 26, so there's an opportunity to look at what your exposure to IHT is, see how much assets you have, what the valuation of those is, because that's the impact. If you've got assets that are less than the reliefs, then you don't really need to do anything, but you do need to have an understanding of what you've got. So I would say for people at this moment, time goes very quickly. The rules are coming in. Seeking advice is the opportunity is now to make sure that you're not caught later. If you're going to start giving things away, then giving them away at the earliest opportunity when you've got this 7 years to live is probably the way to go with it. So yeah, all I would say is take a moment now rather than necessarily leave it. A lot of people we speak to, it's hard to give advice to someone who's 86 years old and who's ill and inheritance tax advice. It's much easier to deal with somebody who's in their 60s, who has planning what they're doing is in good health and potentially can benefit from that. So yeah, take advice earlier the better, I would say, and all of that.
Thank you, Andrew. Paul, if I could come to you for my final question, and I'm just then collating the others that we've had from the floor, and that's on corporation and dividend tax. What is the current situation and what has changed?
Right. So in some ways, I think this is a lot simpler because actually not much has changed. The government's made a big deal about that on corporation tax. So the government has published a roadmap outlining that the headline rate of corporation tax will be set at 25% for the remainder of this parliament. They also confirmed that the small profits rate, so that's for those earning up to 50 grand profit within a year, will remain at 19%. And for those, if you find yourself between 50k and 250k, as many businesses will do, then you get marginal relief, which basically means you end up paying somewhere between 19% and 25%. And there's a useful calculator available on the government website to help you work out exactly what you'll end up paying. It's also been confirmed that the annual investment allowance, which I think is the most relevant capital investment incentive for small businesses, will remain at £1 million, where it was before. And so that's, I think, gives you a useful degree of certainty if you're considering future capital investments. And R&D tax reliefs, R&D tax credits, which we know are important for so many small businesses as they look to innovate and invent new products, will remain at their current rates, which I think, again, is a really important confirmation. So no great change there. There's some things that will be clarified within the capital allowances regime over the coming period. But actually what we have seen over the last 5 years was a huge amount of change in terms of corporation tax, in terms of how levels of the annual investment allowance, there was a super deduction. What the government is saying to us now is actually we want as much certainty as we can give. And that's why they published that corporate tax roadmap. On dividends, it's a similar picture without change. So how much you pay on your dividends will depend upon your income tax band. So the basic rate, 8.75%, higher rate, 33.75%, additional rate, 39.35%. Everyone gets a £500 allowance, which is unchanged in this budget. Obviously, as many attendees to this webinar will be aware, it's a lot less than it used to be, that allowance, but it's above that the dividend rate starts to kick in. So like I say, no huge change on corporation tax or dividends.
Right. So I've got some questions then that have come in from the floor. The first one is from Kelly. Will anything, and this is with regards to business rates, will anything be changing in Wales? We currently receive a 40% rate reduction already.
So I can pick that one up. We don't know yet. It's a decision for the Welsh Government. Business rates is a devolved policy area. So the Welsh Government will set its budget on the 10th of December, and that will be a decision for them. As we saw last year, obviously there is no obligation for the Welsh Government to go with a similar rate of relief to the UK government when it was 75%. Retail hospitality within England last year, but it was 40% in Wales. So we'll have to see. But what I would say is, obviously you wouldn't ask the question, I suspect, if you weren't based in Wales and therefore had an interest in this. Our team in FSB Wales will be, really busy lobbying the Welsh Government on what small businesses need. So please do feed your thoughts into them, and they will be fighting as hard as they can for as much business rates relief as they can get in the Welsh budget.
Great. The next question is from Martin. I run a same-day courier company with 18 self-employed drivers on my books. The fuel duty freeze is welcome, but I was considering employing an apprentice administrator. I am trying to work out if I can still afford to do so. Was there any support for taking apprentices on announced? And do the panel think that the fuel duty will stay frozen at least for the next 18 months? Paul, do you want to take this one? I know fuel was something you really impressed on the Chancellor.
Yeah, I mean, fuel's always one of the top cost pressures for small business owners. Around a third of small businesses told us that fuel increases were driving increased cost levels overall for their business. So obviously it's very welcome that fuel duty has not been increased by RPI as it was due to be, and it's doubly welcome that the 5p cut has been maintained for 2025-26. That does mean that fuel duty rates shouldn't rise before April 2026. Now, it's a funny one, is fuel duty, for sort of geeky policy reasons, but because the government's stated policy looking beyond April 2026 is that fuel duty rates will rise with RPI. That means that's factored into the Office of Budget Responsibilities projections for the public accounts for that period beyond it. So, you know, in a year's time, there will be another decision for the Chancellor on fuel duty and what happens beyond that. But we do have that certainty up to April 2026. I should say, while we're talking about vehicles, there was mixed news overall because the fuel duty really, really good, really, really welcome. But first year rates for vehicle excise duty will go up substantially, which will affect the prices of petrol, diesel, and even hybrid new cars. So it's not all unmitigated good news from a motorist perspective. That's no doubt to firstly raise some extra revenue, but also try and steer people towards the purchase of electric vehicles. On apprenticeships, because this was a very multifaceted good question. So on apprenticeships, there's no extra incentives for an employer to take on an apprentice. But if you're not an apprenticeship levy payer, which you won't be if your wage bill isn't over £3 million, and most of our members are not apprenticeship levy payers, then you will continue to get government funding for 95 or 100% of the apprenticeship training costs, not the salary costs, but the training costs. And as David reminded me yesterday, if you take on an apprentice under the age of 25, then you'll get relief on employer national insurance contributions. And of course, the value of that relief has just gone up. So every cloud. So depends on your business, really. You know, an apprentice can still be a great way to get a talented person on board. Obviously, you do have to make sure that for 20% of the time they're away from the job doing the learning that they're doing on the apprenticeship, and you do have to be across all of the admin that an apprenticeship entails as well.
Yeah, great. Thank you, Paul. And the next question is from Leanne. David, I'm going to give this one to you, so all ears. So I run a cleaning company. The changes will cost my business, I have worked out, approximately £56,000 a year. A major part of my business is as a secondary contractor for public sector contracts, but I am often on 90 or even 100-day payment terms, which means I cannot with all certainty bear these additional costs, as I don't know when I'm going to get paid. Was anything announced on late payment? David, any silver lining here?
Yeah, I mean, firstly on the next bill, like, obviously that is huge and really difficult. I would also just add to what Paul has said, in terms of, obviously it does push up the value of the apprenticeship relief. The other relief that I would just highlight in general while we're talking about it is the national insurance relief for hiring a service leaver or a veteran in the first year that they work since they leave, you know, the Army, the Air Force, the Navy. So that is something that you may just want to consider in general. If it is more to the last question, if you are considering taking somebody on, there is both a relief that is now worth more for apprenticeships, as was your question, but just in general, if you are considering taking someone on, the relief for taking on a service leaver, which is, you know, something we've
Absolutely
strongly in the past, and also I don't think that the take up is quite as high as it could be. So if it is something you are doing or considering doing or have thought about doing previously, I would say the value of that relief has gone up. So just to add that. Back to the cleaning company with the terrifying next bill on payment terms. So there was some stuff in the budget, there was some stuff before the budget, and we are hoping for more stuff after the budget. So I think, you know, this is something we have talked to ministers about a huge amount, you know, including when they were in opposition. There's a few things. There were recent announcements from Jonathan Reynolds, the Shadow Business Secretary, around improving reporting, governance, scrutiny, some of the mechanisms which enable enforcement. At the budget, there was a specific announcement around people who, so if you are providing services to people who are provided government contracts, they will be required, or they will be barred from government contracts if they do not pay you within 45 days, so not 90 or 120. So
that's good news.
That is good news, and it depends who you are working for, but that is good news. And then there will be a further package on late payment in terms of delivering on some of those ambitions that were set out previously. So we hope to continue making progress, and we will continue pushing progress.
That's great. Thank you. That is good news. Late payment is something that members raise all the time. Our next question is from Nancy, and I guess it goes to the frustration that businesses feel really. If the government expects me to fund our collective growth, are they at least going to make it easier for me to speak to HMRC? Paul, this frustration of that bearing the brunt is felt by businesses and kind of exacerbated when they can't speak to anyone. Was anything mentioned on easier contact with HMRC?
So HMRC are getting more funding. That was announced. And I have just nothing but huge sympathy for small business owners that have to deal with HMRC. And you won't believe, and you probably will believe actually, the number of members who contact us with an unbelievably frustrating experience, particularly if they're trying to get a mistake corrected. And that could be a mistake that there's the taxpayer have innocently made and are looking to correct. And it could well be a mistake that's been made on the HMRC side of things. And actually what members so frequently tell us is it's so hard to get a definitive answer. So you may remember last year, HMRC announced that they were planning to shut their phone lines for nearly half the year to encourage use of digital services. And then about a day or two later announced that they weren't going to, because we and many other groups were up in arms about it, because small business owners want to talk to somebody to know that their problem and their situation has been understood and get the reassurance that they understandably want. Small business owners want to pay the right amount of tax and they want to get it right first time. And so I think, you know, there is a huge opportunity if HMRC can improve its service levels. And to be honest, there's no guarantee in the announcements yesterday that that will happen, but it is something that we do keep badgering the government to do. And another aspect of this is, you know, getting your emails answered. It can take around 28 days to get an email response from HMRC to a basic query, which again goes back to that point. Why do people want to talk to someone on the phone? Well, maybe they don't want to wait 28 days for the answer to their question. But the opportunity is massive. The average small business owner spends 52 hours a year dealing with tax compliance. That's 52 hours a year they could be spending on their core business, you know, making more money, driving economic growth. And so I think there is a massive opportunity if HMRC can get better at helping people get it right first time, get faster answers, and take the worry out of it as well. It can be very stressful being involved in a situation where you're not sure if you paid the right amount of tax. And sometimes, not always, but sometimes the tone that HMRC takes can feel like guilty until proven innocent. And I know that members have fed that back. And I think that is a real shame where I've seen those communications framed in that way, because like I say, people are trying to get it right. So this is something that, from a productivity perspective, we're going to keep banging the drum on. We're going to keep asking government to make HMRC's services more customer friendly, get faster answers for small businesses, have a more empathetic tone to communications. But it's a hard slog making that case. So we're going to keep fighting for you.
Thank you. Andrew, I guess your advice here would be for FSB members would be to contact our tax advice line and speak to you or one of the team.
Absolutely. I mean, I used to work in HMRC, and I think it's sad the standard of service that's currently being provided. We get a lot of people on our lines who are now hours on a phone call, and it's not right. Unfortunately, there are limits on what we can make HMRC do, but we are available. You know, if someone's got a tax question, rather than necessarily maybe trying to spend time on a phone line talking to HMRC, the opportunity is to talk to us. So again, saying the services, we have VAT helpline, we have a tax helpline. We'd encourage you to use it. And yeah, we're not going to keep you hanging on a phone line for an hour where you get cut off at the end of it. So yeah, use the services that are available. But unfortunately, yes, the frustration, we get it from all the time. We hope things improve, but unfortunately it's not, we're not seeing it at the minute.
Yeah. So the next two questions I'm going to put together, and they've asked to remain anonymous, which is understandable. And I know we've covered this, but I think it's important that these frustrations are heard. So firstly, we are a medium-sized employer, 40 staff. We will now be looking at any way of reducing staff as they leave, not recruiting, reducing hours, etc., because the contracts that they fulfill are staying the same value, and I can't afford the increases. I'm considering more 0-hour contracts, but assume the new Employment Rights Bill will limit that. And I think the only thing is to reduce the size of my business down, or I might just look to contract a self-employed team instead. And the other one is from a small retailer. We were thinking of taking on our first Saturday member of staff. Now we're reducing opening hours, closing midweek on our quietest day. I will soon be better off getting a minimum wage job with no risk or stress than running my shop. But of course, I'm not a working person, which is in inverted commas. Paul and David, you speak to members regularly like me, and you know, as members, they've got us, me personally, through some of the darkest moments. But what would you say to members such as these who are facing these worrying times?
I mean, it's horrible. And the point that we always make to the Treasury is not just, you know, it's not good enough to just say, well, you know, employers can pass it on, because you know, we do get that means that you have to have those conversations with staff, you know, from whether it's just paying people less than you might have done, or whether it is having to let people go. I mean, just take the second one first. I would say on the Saturday job, I would, the £5,000, the first threshold, that is equivalent to just under 8 hours on the national living wage without paying employer NICs. So that is something to bear in mind on the question of the Saturday job, and it's a little bit more than that for somebody who's on one of the lower rates, if you were particularly asking about young people.
Yeah. So,
you know, up to £5,000 a year, you can employ as many people as you want without seeing any increase in NICs, because it's not chargeable. So it just would slightly
no, that's
flag
really
that on
important to
that
remember.
point.
Yeah.
And then on the wider cost, everyone listening will know their own business a million times better than I will. So how the best way to deal with it is you know, a question for you. The different scenarios in terms of the things that we have put to Treasury, in terms of when we've been arguing for the increase to the employment allowance to you know, just to shield as many people as possible from this, is, you know, it might be price rises, it might be salary freezes, it might be changing structure in terms of how many staff work what hours. You know, it might be looking at staff, whether that's freezing hiring or whether that's even more uncomfortable decisions. But yeah, just as I said at the start, like, we've tried to push as hard as we can the point that people then have to deliver these things. It's not just, you know, it's not just ticking a box and somebody else has to tell people that they can't get the hours they want, and that sort of thing. So yeah, that's all I'd say. I just would flag that first 5,000, and then obviously with the employment allowance increasing, you know, if you were at the smaller end, which I don't think the question would be, because, you know, with 40 staff,
Yeah.
I would just flag you may be a net ahead. So it depends where your business is, and you need to work it out. But it is just horrible decisions, as we've become all too used to in the last few years. So we will see where we can make further progress.
Thank you, David. Paul, anything to add?
Yeah, I think, look, that's a really comprehensive answer from David, and just to echo the sympathy we feel, particularly, you know, for an employer of 40, where yes, you've got 10.5 grand off your NICs bill, which is really important, but that in no way equates to the increase that you're seeing, and we know that, and there are hard decisions to take. I just wanted to comment on the working person thing, which obviously I know has annoyed a lot of members over absolutely a ridiculous debate over the preceding weeks about the interpretation of a manifesto and who is a working person. We all know, and we have said countless times, that no one works harder than small business owners for very long hours to keep the business going way into the night, dealing with HMRC, all of that. And we have made that case loud and clear. It's absolutely ridiculous to suggest, obviously, that you're not a working person, but I get the frustration with that. And I just wanted to mention that as well.
Oh, thank you, Paul. So the last question for me, there's still a little bit of time, just if anybody's got a last minute question that they want to put in. So the last question for me is trying to look forward, really. So Paul and David, what are the next steps that we as FSB will be taking on that kind of lobbying horizon? And Andrew, what one piece of advice would you give to businesses listening today? And perhaps if give Paul and David a chance to have a think. And do you want to answer first, Andrew?
What I would say is that we understand that the national insurance has been a massive hit for employers. I think there is a real place now where people are suddenly going to look at self-employed and think, could I employ self-employed workers on a cheaper basis than national insurance? I think just be careful. It's not a simple answer just to not employ somebody. I think people need to make sure if you're looking at alternatives, please come to us. Please seek advice. You don't want to be caught for other people's tax affairs if you're not doing it correctly. So yes, it's not, we understand on the phone line, we understand this is going to hit small businesses. We're here to help with that advice. Seek it early, seek it before you do something. And really, I think that would be the way to go. In terms of the business asset disposal, you've got until 25, so make those changes now. IHT coming in 26. So yeah, I'm selling the services of the phone line, but I would encourage people to talk to us. And like I said, before taking changes to their business that may have a negative effect, talk to us and see what it can do.
No, absolutely. David and Paul.
So in terms of FSB's lobbying efforts, there's lots that we'll be focusing on. So David mentioned earlier the late payment package, such an important thing in terms of affecting your cash flow, something that members come to us about regularly. We know about 2/3 of small businesses were paid late just in the last 3 months. So we really want to see those announcements that the government's made in September implemented in full. There will be a consultation coming up. We'll be working with the government on that to make sure that late payment becomes less and less frequent and less of a problem going forward. The budget also mentioned a small business strategy or small business command paper, to put it in government terms. Now, that's actually a great opportunity next year to make sure that the barriers that are stopping your small business growing are well understood by the government, and there is a plan in place to address those. Earlier on, I spoke about finance and personal guarantees. I think that's an area where there is potential for government to provide some smart regulatory solutions to mean that you're not needlessly being asked to sort of put your personal home on the line when taking a small loan. So again, that will be something that we're very, very focused on. And in terms of feeding in to us, please do remember to sign up for our Big Voice program, because we're only as strong as the evidence that we get from our members, from the small businesses who we represent. So respond to the surveys. They only ever take 5 to 7 minutes, but I can't tell you how valuable that 5 to 7 minutes of your time is from our perspective, being able to make the best possible case to government on whatever issue that we're focused on. So do please, if you haven't already, and I'm sure many of you have, sign up to our Big Voice program. David?
I mean, I just echo the last bit of that. Please do sign up. Please do feed in. It makes such a huge difference that when we go and talk to government, they know we're talking based on what you have said, and it makes such a huge difference. It means that when we say something and then they go back to their constituencies wherever they are in the country, that they actually recognize the truth of what we're saying when they if they talk to you in person in their MP's office, and you've been saying this is what I'll have to do for prices, this is why late payments is such a problem in terms of the cleaning company that we talked about earlier. It makes such a huge difference. So please do sign up for Big Voice. Very useful. In terms of our lobbying, so as I say, the driving thing has been to try and hit this budget as heads on as possible with things like the employment allowance, with all the things that weren't in this that are the sort of treasury pet projects for people that they think should be paying more tax when really should be left alone to grow their business and grow the economy. Obviously, this is what's got to. It is useful, including from Big Voice, to have really as rich a data as we can in terms of the impact. We will always continue to try and make progress on tax whenever the opportunities come up. As Paul was saying, there are various things that we will now focus on in terms of other things that can help. So whether that is late payment, whether that is the small business command paper, where hopefully we can make some progress on personal guarantees, if not before then. And then the industrial strategy, which is really the answer to where were all the growth measures that might have been announced in the budget from a kind of ministerial level. They have taken those out and they have put those in things like the industrial strategy and the small business command paper, and they're slightly held separate to the fiscal piece. So we will continue. Well, we will hopefully get some good progress on that. On things that people might be wary of, the Employment Rights Bill. We are doing a lot of work on the Employment Rights Bill. The positives, in terms of if you are worried about the Employment Rights Bill, is a lot of the big decisions about the things that will have the biggest potential impact when you're thinking about who you recruit. Those decisions now won't take place for a while. So we have time to use that kind of rich evidence base to talk about it. On the 0 hours question that was just mentioned earlier, that really is just on the, you know, if somebody is working on a consistent set of hours for 12 weeks or more, that is the only thing I would, you know, I would be a little bit wary to plan against. If it is not in that situation, then I think it is unlikely to be too relevant to that bill, and that won't come in for some time, is the only thing I would say on that. But yeah, as Paul said, big voice, anything else that you can feed in, really, really helpful. And as Andrew said, like, you know, we have tax advice available, because a lot of this will depend on your specific circumstances. So hopefully that is something you can follow up on.
Thank you, David. I just want to take, we've had a final question from Rachel, who is in the process of opening a children's role play centre, a startup. And she says starting a business is daunting enough, but it just seems to have got harder. What I would say, Rachel, is have a look on our website, find your local development manager's contact details, and they can signpost you to all the local support for startups. So have a look on there, and you know, really, really good luck. It is daunting, but it's really exciting as well, and keep in touch with how well it goes. Really good luck, Rachel. So that's it for now. I've managed to keep you all corralled into the hour. We're at 11:56. So all that really remains for me to say is a massive thank you to everybody who's tuned in today. A massive thank you, especially to those who were brave enough to submit questions, because those questions is what everybody else was thinking. As I've said throughout, the event has been recorded. It will be available on our on-demand page, so make sure you take a look back and listen to some of those figures. If you found it useful, please do leave us a Trustpilot review. We really appreciate it, but more importantly, that review encourages others to sign up and access the support that's available through these webinars. And remember, as well as my amazing colleagues who've joined us today, Andrew with the Tax Advice Line, Paul and David, and our other national colleagues, there is your local development managers as well, and all those details are on the website. And finally, just a massive thank you, Paul, David and Andrew, for today. Really insightful. And that's everything. Thank you and goodbye.